Hey, Matt, the Mortgage Guy here. This is my annual 2021 housing outlook where I'm going to talk about this year in real estate, this year in mortgage, provide my insight, go over some things I follow, who I respect, and some information that as a consumer you should find valuable from somebody who I might not be the expert of experts, but somebody who deals with thousands of people every year, is able to help and serve hundreds of home buyers in various markets in California. I think that I've got a pretty good finger on the pulse, and I'm trying to stay up to date with as much as I can, and many viewpoints as possible. And I'll try to, not just cherry pick all the stuff that says housing is going to be great forever, because I think that that's what you generally expect when you talk to somebody in mortgage or real estate, that they're always going to say things are going to be rosy, when that may or may not be the case. As we know, markets can ebb and flow. So without further ado, I'm going to get into it and provide some data, my insight, and hopefully it's helpful. 2021, something that is pretty cool is the demographic data shows that, married couples and people with kids are a lot more likely to be homeowners, to be buying houses. So it's an indicator of demand. What has happened over the last few years, and you can see from this graph, is people are waiting longer to get married. And so men are waiting until they're almost 30, women are waiting until they're almost 28, and then early 30s, mid 30s, having kids. And so when you look at demographic info and realize, there's a ton of folks that are between the ages of 35 and 40, those are folks that are potential buyers that can affect the housing market, the demand. And supply and demand, you'll hear me talk about it a lot. There's no better indicator of what prices are going to do in real estate in the future than supply and demand. When there is a ton of demand, like there is now, due to many different factors, and there's limited supply, again, due to tons of different factors, prices are going to go up. And we've seen that. It's been absolute bonkers in the real estate market in 2020. And 2021, hopefully, is a little tamer, but we're going to see some of the same. And I'll get into that later. This shows you about, somebody buying their first house. They're twice as likely if they've got at least one child. If you're 30 to 39 years old, you've got no kids, 38% chance you're a homeowner. And if you got at least one child, that doubles. So that's that. This is kind of funny too, because you can find a lot of stuff by searching or digging into Google search history, and look at baby registry. People are having babies more than ever. So that may lead to an increase in demand. And this is a graph that's interesting. This is one of those things that when I hear certain theories or whatnot, I like to see it. I like to actually talk to people, and if we're closing 300 deals a year, I'm probably talking to 5,000 people a year. So I'm hearing conversations about moving to Idaho. I'm hearing conversations about moving to Houston and Dallas, Fort Worth. And I'm also hearing plenty of conversations of, somebody who works in Santa Clara and wants to move to Sacramento because the prices are 35% of what they are there for the same house, and they can work from home. This is what this graph is showing, is that people are moving out of urban areas. And this is a graph that's going back 5 years. This isn't talking about the pandemic. The pandemic just exacerbated this and sped this up. But people are moving away from super urban, high-rise condos, middle of the city, super expensive stuff to have more land. And especially when companies are transitioning to work from home, hybrid models, and things like that. So something to think about, that buyers are thinking about more space and distance. If you're in certain areas, some of these exurb areas, you'll see, 10% price appreciation overall, but maybe in some of these exurbs, it's like 20%. The price appreciation is bananas because demand is bananas, because people go bananas when they're in too small of a house. They need some room. They need an office, they need a gym, and they need space so that their kids on Zoom are not in their grill. This is an interesting one that I see too, talking to as many people as I do, that a lot of young adults are driving growth in home ownership. So these under 25 or 25 to 29 age brackets are buying more than ever. So they are part of this increased demand. I don't know where this slide is, but these folks that are younger are moving a lot more. There it is. Under 35, moving 4 times in the next 12 years. And so that's just, you're competing against the same buyers a lot more. If you're over 50, you're a lot less likely to move. But with the current demographics, there's going to be more moving and shaking, and therefore more people on the buy side of things. We need more inventory. That's what it's all leading to. And here we show like how low inventory is, and this thing cuts off in 2019. If you could see what 2020 looks like inventory wise, it's like that. And the current inventory levels are so low in so many markets. It's why we've seen the price appreciation that we've seen in 2020, and hopefully it slows down in 2021, but it's still the number one reason why you're getting 15 offers, why people are getting so frustrated trying to buy a house. This is an interesting graph that I can hopefully shed some light on, that things have continued to pick back up. This shows how COVID slowed down new construction, and new construction kind of came to a halt early 2020. By the time we got to the end of 2020, I think new construction was up year over year, like 30% or something. So home builders know how much demand there is. Home builders know how much money there is to be made. They're building like crazy, as they should. And if they can build a lot, and if some people, after the economy rebounds a little bit, are comfortable and happy and safe and healthy and ready to list their houses, some more people listing their houses may ease some of our inventory problems. All right. Some fun math. And this is funny too, because you can, if you're renting or you're an owner, you can, renting out your house, you can look at this current price to rent ratio. I took one of my rentals and kind of just plugged in the numbers, and you take the monthly rent, times that by 12, get the annual amount, and then times that by 17. And that's about what the house is worth. And it was, this thing was right on. It's just showing that right now that's at 17. And in 2006, it was 24. Homes were more expensive compared to rents. It's also interesting to note that was 14 years ago. And when things get more expensive over time and you account for inflation, it's even wider of a gap between like how bonkers things were in 2006 and how they are now. So that's that. This is an interesting graph to talk about, just because of the idea that people in forbearance or people that have cut hours or lost a job are going to lose their house. There's going to be a zillion foreclosures. This shows you the vast majority of homeowners have more equity. And if this Q1 of 2020 shows folks with this much equity, and we know that 2020 saw 8 or 9% price appreciation in a lot of markets, shift this even more this way. People have more and more equity. This portion over here where people have less than 10% of equity, this probably makes up 6 or 8% of all houses with mortgages. This doesn't even account for all the houses that are fully paid off, but it's a graph showing that people are in a great equity position and a lot less risk of foreclosure than some of the fear mongering may tell you. All right, quick housing overview. Just tells you that 124 million households, about a third of those are renters, 2/3 of those are owned. An interesting stat too in the U.S. that about a third of the 27 million homes are owned free and clear. Look at that. Average loan to value is 53%, meaning like, if your house is worth 350, you owe 175 or what, más o menos. All right, quick appreciation forecast for 2020. I put down these numbers, 5.7, and then the mortgage rate forecast just because I saw it on realtor.com. Whoop, go back. I don't know if I know how to go back. Ba-boom. Up 5.7. This is a nationwide stat, and I'll show you some more outlets and what they say. And then mortgage rate forecast from realtor.com shows rates going up to 3.4 by the end of the year and averaging 3.2, which is interesting because as early as the third quarter of last year, or as recent as that is what I should have said. I was telling a bunch of my clients, I see rates going lower in 2021 because lenders are at capacity, and once lenders are able to loosen the reins because they've got more underwriters, they got more support staff to handle more volume, they're going to lower rates even more. I've switched my stance on that for a number of reasons. I'll show this real quick since I'm talking about it. Matt Graham writes for Mortgage News Daily. He's a super smart dude. Talked about these last couple of days and the craziness in the Georgia Senate race, and a bad couple of days for rates. Worst days we've had in a while, where rates ticked up 0.1% in 2 days, which they don't move that much that fast. He talks about it right here. What's that damage? 0.125 in many cases. So anyway, the gist of this article, without you having to read through it, is, this big move feels like a big move, but there's room for a lot more move to the upside, mainly because the Fed is buying mortgage-backed securities. So they're pushing mortgage rates lower. It's artificial. If we start to recover, the economy recovers, we got vaccine and everybody's healthy and happy, and California opens one day and the Fed says we're going to stop buying mortgage-backed securities, rates are going to go up. The interesting part about it is it wouldn't be the worst thing for the housing market. If rates went up to 3.5% on a 30-year fixed, then there would be less demand. It would be less bonkers. So anyhow, I had a really good conversation with a great client where he told me, hey, Matt, I saw something you put out 3 or 4 months ago where you talked about rates going lower possibly in 2021. I said, yep, I changed my mind. I don't see it. And if we go here and look at these projected rates from Fannie, from Freddie, from Mortgage Bankers Association, National Association of Realtors, all these are higher than current rates. Current rates are, depending if you're paying points or not. If you're not paying points, you're probably 2.75. If you're paying points, you're, 2.25 to 2.5. But, Fannie Mae is saying 2.8, Freddie Mac saying 3, Mortgage Bankers Association saying 3 to 3.3, and NAR about the same. So interesting to see that a lot of, these are reputable folks that understand the mortgage industry and the factors that go into rates are saying that rates are going to go up. So interesting stuff to look at. And this is interesting. This is home sales. This isn't price appreciation. Everybody expects, I guess Freddie Mac expects a little less. All right. Everybody else expects, between 6.4 and 7.1 million homes being sold, which is a good thing. More homes on the market. Some of this is new build stuff. Some of this is, people are, there's plenty of people in 2020 that just for whatever reason just decided not to move, decided not to list their house because, they don't want to bother with moving during a pandemic. And as the economy recovers and we get some footing and some, certainty with health and whatnot, some of that stuff should open up, is the hope. Here's another home price forecast for how much we expect them to increase. Mortgage Bankers Association and Fannie and Freddie are all, shooting pretty low. But here's the interesting part is I've said this in prior years where everybody is holding their breath for 15, 20, 25% decrease in home prices and they're going to grab a good deal. Nobody thinks prices are going down in 21. Nobody who knows anything about anything is, except for a few lonely dreamers and some YouTube entertainers that are clickbaiting folks into house market crash. And the data they have is just laughable, to be honest. Why they think there's going to be a foreclosure wave and stuff. I won't get into that here. I've got into it in other videos. But anyhow, a quick shout out to Sacramento, since we're talking about home price forecasts. Number one on Realtor.com's list for 2021. Home prices are expected to increase by 7.4%. And this is interesting too, because if you're a California buyer, and I'm in the Sacramento market and doing hundreds of deals in Sacramento, I've got buyers who currently, unfortunately, are up against 12 and 15 offers. And so it's frustrating when a house is listed for $479 and there's 15 people that offer, and you've got to offer $525 and it appraises at $510. Part of the buyer's mindset is like, I don't want to pay $525 for something that's worth $510. And the conversations I'm having, one, you're in a historically low interest rate, which obviously helps things. You've got a 2.621 30-year fixed. That is a great loan to be in, a lot better than the loan that I signed in 2006 that was a 6.75 first and a 12% second. But, if you're in a position to buy and you've got, good job and stable financially and whatnot, if you pass on this house because it appraised for $510 and you're paying $525 and home prices appreciate by 7.4% in Sacramento, like some folks are predicting, then 7% on 500 is $35,000. And so that house probably sells to the next buyer once you say I'm out. Next buyer says, I'll pay $525, no problem. They've got a backup who offered $520 anyway. And, they counter them. If you come up to $525, it's all yours. Okay, cool. You got to pay the $15K spread. Good. I mean, that's just the nature of the beast. Unfortunately, that's a new comp. And so, it's essentially worth $525 when you close on it, even though it appraised at $510. I don't know. It's a strange world. But if it goes up 7%, then it's worth $562 next year. And you're competing against people and it gets bid up to $575. I don't know. That's just me prognosticating it. Hopefully for some of the buyers that are out there that are frustrated, it's not going to be that hard for that long. And that's a good transition to our friend Diana Olick. She always, for like years and years and years, is always super bearish. She just thinks the housing market's going to collapse every single year. She's only been wrong for 10 years in a row, but she's going to get it right one of these years. I just think it's funny. So mortgage demand from home buyers pulled back sharply. This is her article because the last 2 weeks of the year, the mortgage applications to purchase a home, they fell by less than 1% in the 2 weeks that ended January 1st. So it was just Christmas week and stuff. But anyway, she likes these headlines. She likes talking about how housing's going to come to a screeching halt. I just thought it was funny because the stunning surge in home buying brought on by the coronavirus pandemic may finally be easing up. The surge in home buying was not brought on by the coronavirus pandemic. It was brought on by super low interest rates more than anything. In my humble opinion, the end of 19 till middle of 20, like we saw almost 1% dip in interest rates and people started salivating at the mouth when they saw they get a 30-year fixed under 3%. So that drove home prices more than anything, I think. It wasn't the coronavirus. But anyway, she said it was really, more telling that purchase volume was only 3% higher than the same period a year earlier. Purchase volume's been like 20% more than last year, year over year. So this is, in all fairness, like, okay, Why was these last 2 weeks slower compared to last year? So I don't know. Buyers are experiencing sticker shock. I'm in the trenches, and I'm still talking to buyers every single day that if you're in a strong financial position, you have a stable job, and you've got money saved for a down payment, you're going to be in a good position in a 30-year fixed. And like I explained to a lot of people, if you've got a comfortable mortgage payment, super low 30-year fixed interest rate, you could buy your house for $475 today. If you plan on staying in it for long term, it does not matter what it's worth next year, the year after, the year after, the year after, the year after. Over time, I will bet both my pinky fingers that if you buy a house in 2021 and then call me in 2036, 15 years later, I bet you it's worth more. If it's not, call me in 2036. I'll cut off both my pinkies. I'll chop them up. I'll simmer the sides of them, and I'll eat them on YouTube. It's a promise. All right, what else we got? In closing, because I don't want this video to run too long, just a few expert views on the housing market. Lawrence Yunes, the chief economist at NAR, the National Association of Realtors. In 2021, I think rates will be similar or modestly higher. That's what everyone else is saying. So mortgage rates will continue to be historically favorable. Thank you, sir, for that. Danielle Hale, chief economist at Realtor.com. We expect sales to grow 7% and prices to rise another 5.7% on top of 2020's already high levels. So continued home price appreciation, which means homes get more expensive. And that's just supply and demand. There's not enough houses to meet the demand of the people that want to buy them. That's why Apple charges $1,200 for an iPhone, and people get on waiting lists for the new iPhone because there's only so many of them. And they might, artificially control that number just because it creates the scarcity and people trying to buy it. I mean, there's in popular cities and places where people want to live, there's only so much land to build on, only so many houses, and we continue to, create more people. There's more people every year. So anyway, where's this guy from? He's from the National Association of Home Builders. This guy is having a great year. With home builder confidence near record highs, we expect continued gains for single-family construction, albeit at a lower growth rate than in 2019. Some slowing of new home sales growth will occur due to the fact that a growing share of sales come from homes that have not started construction. Nonetheless, buyer traffic will remain strong, blah, 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 blah. I don't know. This dude should be a little bit more optimistic, I think, because every home builder I know in California is, and here's the funny part too, is we've got people leaving California like it's going out of style, moving to Idaho and moving to Texas and Nevada and Florida. And they still can't build fast enough. Stuff is flying off the friggin' shelves. What does Mark Fleming from First American say? Mortgage rates are expected to remain low. Millennials will continue forming households, keeping demand robust. Now, this is something I didn't get into a lot. I said it a little bit earlier, but I didn't talk about the stats. Somewhere, Barry Habib, my buddy from MBS Highway, had some really cool stats about that specific demographic. Like the oldest millennials are probably late 30s. And so I don't know how big the gap is, but that 30 to 38 population is a house buying demographic. And the numbers for how many folks are in that age range over the next 4 to 5 years is huge. It's a lot bigger than it has been over the last 10 years. That's going to drive demand. Those folks are buying houses. Supply versus demand is how you figure out if home prices are going to go up or down. Obviously, there's tons of other factors. If rates go up, which part of me hopes they do, then that should quell demand a little bit. And maybe we don't see 6% home price appreciation. Maybe it's 3%. Maybe rates go up even more. The Fed takes their foot off the gas and they stop buying mortgage-backed securities. Rates go to 4.25%. Maybe we see a 5% dip in 2022. That wouldn't be that bad. But there's a lot of demand. So it's highly unlikely and near impossible that we see some humongous correction. I might be wrong. That's why I record this. I get to look at it later and laugh at myself. Despite the best intentions of home builders, probably more housing supply, the big short in housing supply will continue into 2021 and likely keep home price appreciation flying high. All right, I'm cutting this off, man. It's 26 minutes long. Hope you enjoyed it. If I can be of any assistance, shoot me an email, Matt, M-A-T-T, at mattthemortgageguy.com. I'm going to post this in a few different places. Hope you're well and enjoy 2021.